If you look at the numbers, this is not a healthy bank because of the legacy issues, because of Archegos, because of the misdemeanors that they've had here and there. And of course, it's only a couple of days ago that they said, look, they reported some things in not the way they should have. If you look at liquidity, though, the ratios are pretty strong. I mean, this is not SVB. This is a pretty healthy bank that can repay some of their depositors. In fact, if you look at the liquidity coverage ratio, which to put simply is the bank having enough money, having liquid assets to pay back half the liabilities and deposits and loans from other banks. Now, this is actually huge. So if customers stick with the bank, if also shareholders don't slam it by as much, they can get by. So what happened yesterday was like the sense of panic, I think probably brought on by also 3 failures in U.S. banks. What happens next? Look, for the moment, you have everyone trying to put out the fire. You have the S&B, you have FINMA, you have the regulator saying, look, here are the lifelines that you need, which they already had in the past because they could have drawn for central banks. I think the panic also stems, Tom, from the fact that this is a very embedded bank in the financial system. So this is not SVB. This is something that could if something ugly were to happen, could really impact all parts of the financial world.
Francine, good morning. As you kind of outlined there, this is a globally systemically important bank. Unlike SVB, it's got massive counterparty risk. And as you say, they always kind of had those liquidity lines, but it's publicly drawing them and going on the offensive. I'm curious for kind of trading today, what do you kind of think is the next catalyst we're watching for to know whether the worst is actually past for Credit Suisse? Obviously, we're going to see a share price bounce in the open, but what comes next?
So I think what comes next is really waiting for the chief executive or someone from the executive team to tell us about the outflows. Now, this could take a couple of days, it could take a couple of months, but if you're seeing the kind of outflows that we saw in December, which is really billions of pounds being taken out, then they don't have a business model. Mark, just 2 days ago, we had the Credit Suisse chief executive here who was in London for a banking conference, and we tried to press him on the share price. The share price at the time was 97% lower than it was about 10 years ago. It was at a record low, and this was before yesterday's rout. He was at pains and saying, look, I can't do anything about the share price. I need to deliver on what I promised, and that will take 3 years. I mean, 3 years? Are you kidding me? After what happened yesterday, it's unclear, or it's almost impossible for investors to give them that much time. So we need to look at the outflows. We need to look at deposits. If they're ready to call in friends and favors and say, like, look, please keep your money with us because we need that as a message of strength right now.